So Palantir Stock, the stock that is still super new at the public market, was already able to perform an incredible upwards trend of almost 265% in just a few months, but recently underwent a pullback from those all-time highs. So what we are going to do today is give you an insight into what is actually happening to the stock and break down exactly whether it is still a buy at the end of this video. As always, what we want to talk about in the next few minutes is absolutely crucial to know before even considering to buy the stock, so stay tuned for that. Before we jump right in, however, just make sure to hit that subscribe button down below. And as we'll keep you updated on breaking news and awesome trading opportunities every single day, subscribing would not only help us but also you. So there is really no excuse for not smashing the subscribe button. It's free, and you can always unsubscribe if you feel so. Alright, let's start talking about the stock. So in order to figure out whether Palantir is a stock to buy at the end of this video, it's crucial to first look at the company you want to trust your money with itself. In the case of Palantir, we are looking at a software company that builds enterprise data platforms for use by organizations with complex and sensitive data environments. And although the company was first criticized for solely focusing on the government sector, it was able to expand massively in the past few months and has many commercial clients in its kitty. This is super important because if the company wants to generate revenue and profits, it needs more commercial clients, and it is currently hitting the right spot. That means that right now, the software products of the company cover an equal revenue split between government and commercial clients with a huge possibility of expansion in both industries. But over the last year, especially the company's government business has soared. The company signed deals related to the vaccine rollout, and while these deals may close soon, the commercial business is going to pick up as well. But as this is crucial to consider for our prediction at the end of the video, we also have to dig deeper into why the stock is down despite those good-looking company fundamentals. So the decline is driven in part by the broader sell-off in high-growth stocks, mixed December quarter earnings, and the expiration of the company post-IPO lockup last month, which has enabled insiders to sell shares. Separately, recent comments by the company's CEO asking investors with a short-term focus to consider other stocks are also likely to have hurt the stock. And while the revenue outlook remains quite strong, with the company on track to grow at 30% plus levels each year over the next 2 years, the company's valuation multiple is very high, with the stock trading at about 28x forward revenues. Palantir is also not yet profitable, despite the fact that it has been around for around 17 years now. Taking a look at recent earnings, it reported fourth quarter 2020 revenue of $322, which outpaced the expectations of Wall Street at $301 million. Palantir is expecting a 45% revenue growth for the first quarter of 2021 as well, and it looks very possible for the company to achieve that. Additionally, it has a strong liquidity position with a cash balance of $2 billion. Palantir is heavily investing in the business, and it has enough cash to use while the business expands. The company's assets far surpass the liabilities, so there is nothing in the balance sheet to worry about right now. So to sum it all up, Palantir stock is currently valued appropriately. It is a good time to take a long-term position in the company. It may not be profitable yet, but it is taking huge strides with the latest contracts. The financials look stable and its market share is growing with each new commercial client. Palantir Technologies has a huge market to cater to, and it is already working with some of the biggest names in the government sector. Alright, with that being it for today's video, thank you very much for watching. If you like this video and want to support our mission of providing free financial information to everyone here on YouTube, please ensure you're subscribed and definitely consider leaving a like. As mentioned before, it really means the world to us. Thanks a lot and see you next time.